Hi, I'm Justin Kuntz, Managing Director of Pacific Wealth Management. As we get closer to our next presidential election, Pacific Wealth Management is evaluating what may happen after we see the results. We always take an agnostic, unbiased approach to politics when it comes to interpreting how any result could impact portfolios, markets, and the economy. At this point, Wall Street is betting on a Trump victory. He's pulled ahead in a couple of battleground states, and we've been left to analyze what may happen down the road if that does play out. What sectors of the market performed under the last Trump term? How did that compare to the following 4 years under Biden? And what may occur in the next 4 if Trump is elected? Let's dive in. Another 4 years under Trump might economically mean less regulation, more tariffs, and lower taxes. What that will mean for the sectors of the market is pretty well indicated by what happened in his first term. So this first chart explores what happened in the first term of Trump's presidency versus Biden's term in growth versus value versus defensive sectors. Let's dive in. In this chart, we see 4 sections. Keep an eye on the top section of the chart where we see 3 lines. These 3 lines are the path of different stock market sectors through the Trump presidency and through the Biden presidency. The orange line is the growth sector of the market. The light blue line in the middle are the defensive and bond proxy sectors, and the dark blue line are value-oriented sectors. Growth is a section of the market that includes discretionary stocks, technology stocks, and communication services. Think about Amazon, Facebook, those types of companies. Defensive bond proxy are related to consumer staples, healthcare, utilities, and even real estate. Companies like Costco, Walmart. The value-oriented companies include financials, materials, energy, and industrials. Companies like banks, JP Morgan, for example, or even industrial companies like Caterpillar. As you can tell by the top chart, under Trump's presidency, growth-oriented stocks were the best performer. They got a big boost during COVID at the very end of that section of the chart, as you can tell, but they maintained their outperformance through the duration of his term. That outperformance remained consistent through the Biden presidency and through the Biden administration as well. However, the differential between growth sectors of the market and defensive sectors of the market was more substantial under Trump's term. The second chart shows performance of each sector of the S&P 500 relative to the greater S&P 500 index. As you could tell, there are only 3 sectors of the market that showed substantial outperformance: consumer discretionary, healthcare, and information technology. Information technology and consumer discretionary were by far the largest outperformers relative to the rest of the S&P 500 during Trump's term. What played out over the duration of Trump's term was a little different to Wall Street's gut initial reaction to Trump being elected. In 2016, the picture looked quite a bit differently in the 21 days following his election. Energy, materials, and industrials outperformed, as well as financials, whereas information technology, utilities, consumer staples all underperformed quite substantially. What played out over the next 4 years was definitely different than the initial reaction to a Trump win. This next chart is a little bit counterintuitive and might surprise some people. The orange line represents Ned Davis Research's Clean Energy Index, and the blue line represents the S&P 500 Energy Index as a whole. What this chart tells us is the performance of each of these indices during the Trump administration and the Biden administration. And as you could tell, the Clean Energy Index actually outperformed substantially during Trump's presidency relative to Biden's presidency. And on top of that, the energy index of the S&P 500 as a whole actually underperformed during Trump's administration and outperformed during Biden's administration. To touch on another sector of the market in the financials arena, You can tell that on average, financials tend to do well around election year cycles, regardless of the outcome. What we can see here with these different lines are different situations and the performance of financials during each of those situations. In the dark blue line at the top, that is a situation in which the incumbent party wins. The black line is the average, the orange line being the incumbent party losing. The current case in the current election year is represented by the light blue hashed line that's only through about mid-July. In any event, the average performance of financials during election years is generally pretty strong, as you can tell by the chart. Another interesting series of data points is represented by this chart. You may want to pause this one as there's a lot of information to absorb, but what this chart is illustrating is the S&P 500 and its initial reaction to the 2016 election when Trump won the presidency. It breaks down the top 10 best performers in the market as well as the top 10 worst performers in the 21 days after Trump was elected, as well as the 21 days preceding it. Banks, construction and engineering, trading companies and distributors, real estate management and development were all among the top performers during those first 3 weeks of the election, after the election. This chart represents the same data in a different time frame. Instead of around before and after the election date, it's showing the data of the top 10 and best and worst performers around the first presidential debate that happened in June of this year. Perhaps at this moment, Wall Street gained a little bit more confidence that Trump was going to win the election at this stage. Therefore, you can see the differential in performance before and after that point. At the end of the day, what we're seeing is that Trump trade 2.0 looks quite a lot similar to the 2016 Trump trade in Wall Street's initial reaction to what a Trump administration may bring. As we get closer to the election, it's sure to be a circus, regardless of the result. We'll always use the objective data feed to determine how we construct portfolios to both protect and grow our clients' wealth along the way. If you have any questions, please don't hesitate to reach out, and we'll keep you posted on any further developments. Thanks.